In 2030, you own 100 shares of Tesla stock. However, what if I told you that these shares may be your path to an unthinkable financial journey? Today, we're going to uncover the mystery surrounding Tesla's future and delve deeply into the potential, explore a variety of scenarios, and even take into account some innovative technologies that have the potential to completely change the stock market landscape. From renewable energy to self-driving cars, Tesla has been a force to be reckoned with. However, what lies ahead that could send Tesla's stock to unthinkable heights? Will it be fully autonomous technology or perhaps something even more revolutionary? There is a lot to discover, and it's going to be an exciting ride, so buckle up, people, because we're about to take a trip through time and numbers as we examine Tesla's possible stock values in 2030, analyze the scenarios, and perhaps even uncover the hidden treasures of Tesla's stock market future. But first, make sure to hit the like button and subscribe to Tesla Stock News. Now that we've done that, let's get started. According to this video recording, the price of Tesla stock is currently around $217 per share. So if you were to invest in 100 shares, that would come to $21,700. However, the real question we need to answer today is the potential value of those 100 shares in 2030, because we're thinking about making a long-term ultra bull cases. One that includes FST revenue and licensing, and another that does not. Crucially, take robot tax into account. Our examination of insurance and bots only looked at Tesla's core business segments, which include energy, FST, licensing, and vehicles. Worldwide earnings and profits. Let's start by looking at these scenarios. In the hyper bear case, we expect 10 million vehicles to be delivered, with an average selling price of $30,000. 15 million deliveries at $26,000 per vehicle are projected in the base scenario, but 20 million deliveries at $23,000 per vehicle are estimated in the bull case. In the extreme B scenario, 25 million deliveries are anticipated, with each vehicle costing an average of $20,000. Notably, Tesla may need to provide more reasonable priced vehicles in order to boost sales, which could have an effect on revenue. Do you know who else has shares in Prote? Before we get into the specifics of Tesla's potential future value, there's more to Tesla optimism than just watching from the sidelines for Tesla fans and those with a keen eye for the next stock market jewel. According to our friends at Seeking Alpha, your one-stop destination for the most recent information on Tesla is Seeking Alpha. Targets for the price of Tesla shares, Tesla's inventiveness, and everything Elon Musk. The greatest online source for pro-Tesla news is Seeking Alpha. Get down to the facts and avoid the lamestream media's anti-Tesla rhetoric. For a Black Friday special discount that applies to all situations, click the link in the description. By 2030, we project a 20% operating margin for automobiles, which reflects possible cost savings brought about by economies of scale and better material sourcing. The comparable profit figures are as follows. Moving on to the energy sector, we have consistently generated $90 billion in revenue yearly by 2030, with an operating margin of 20%. Conversely, services are more erratic and contingent on variables such as the quantity of Tesla automobiles in use that need repairs and replacement parts. In the worst bear scenario, revenue is projected to reach $39 billion. When we combine these segments, the total revenue ranges from just under $500 billion in the ultra bear case to nearly $700 billion in the base case, with a 20% operating margin. It's interesting to note, though, that the ultra case has lower revenue than the bull case, which can be explained by the shifting focus of Tesla's business going forward. The question of how much Tesla stock will be worth in the upcoming years is crucial for Tesla's future and a very complex topic. But fortunately, our partners at Seeking Alpha are here to make this Black Friday even better with a special offer. They are great for understanding these and other complex topics. For a Black Friday deal, click the link in the description. In fact, the number of Tesla vehicles on the road, along with FSD and other services, will be important revenue generators for the company in the future, not only car sales. With a price to earnings ratio of 30, FSD in particular is well positioned to play a major role in Tesla's core business, along with energy. Based on net income projections, we expect figures to range from $96 billion in the ultra bear case to $139 billion in the ultra bull case by 2030. Given Tesla's impressive net income projections, it would not be surprising to see them consider share buybacks in the upcoming years. Let's now discuss stock prices and the value of your 100 shares in 2030. In the ultra bear case, the estimated stock price is $884 per share, with a market capitalization of just under $3 trillion. The basic scenario forecasts a market valuation of about $3.6 trillion and a stock price of more than $1,100 per share. In the base case, the market capitalization exceeds $4.1 trillion and the stock price approaches $1,300 per share. Additionally, the bull case predicts a market valuation of over $4.2 trillion and a stock price of over $1,300 per share. Finally, the value of your 100 shares by 2030 will depend on which scenario eventually materializes, with the ultra bull case projecting a stock price just below $1,300 per share and a market capitalization nearly exceeding $4.2 trillion. All scenarios have the potential for a significant increase. It is evident that Tesla's growing emphasis on FSD and other services, in addition to car sales, will be key to its future success. Tesla is positioned as a major participant in the changing automotive and technology scene because to its diversified approach. Tesla's incredible. The possibility for large profits and revenue figures are quite alluring, but what if you could figure out how to spot the next Tesla? Enter Seeking Alpha, whose stock screener is a unique and formidable tool that can help you locate the best businesses with great long-term growth prospects. Imagine the opportunity to investigate and find the next Tesla before it takes off. Tesla's most recent developments. Keep in mind that Seeking Alpha can serve as your entryway to the next significant investing opportunity. Don't pass up this exclusive Black Friday deal. In the Ultra Bear example, click the link in the description. Assuming a stock price of $1,200, your 100 shares would be worth about $888,000 in 2030, compared to their current value of $20,000. In the worst scenario, this would be a gain of more than $68,000. The base case gains would be about $990,000, since 100 shares would be worth $10,000 in 2030 compared to the current value of $220,000. In 2030, 100 shares would be worth more than $116,000, resulting in gains of more than $116,000. In a bull market, 100 shares would be worth over $110,000 in 2030, with gains of over $90,000. Finally, in the extreme scenario, 100 shares would be worth more than $118,000 in 2030, which would result in gains of around $888,000. Based on these estimates, Tesla's energy and vehicle companies have a price-to-earnings ratio of 30. Let's now examine a more reasonable scenario. With an average selling price of about $33,000, Tesla should be able to produce 133.5 million cars by 2030, generating almost $450 billion in automotive revenue, assuming a 20% operating profit. Vitality revenue stays the same, and services revenue is projected to be slightly above 53 billion with an operating margin of 20%. Yes, using the same 30 ratio, this amounts to $588 billion in revenue and over $118 billion in net profits. This would result in a market valuation of more than $3.5 trillion and a stock price of $1,837 a share. When compared to the current value of $220,000 for 100 shares, your 100 shares in 2030 would be worth over $8,000, meaning you would have gained about $889,000. In this scenario, you would still make nearly $50,000 in unrealized gains with your 100 shares if you bought them now. It's important to note that these estimates do not account for Tesla's full self-driving business when we factor in FSD. This projection is based on the assumption that Tesla's vehicle and energy businesses continue to grow even if we reduce the operating margin to 10%. A more conservative estimate would still see the market cap exceed $2.1 trillion with a stock price of $1,776 per share. The possibility for increasing sales and profit becomes even more significant. Global revenue and licensing are included in FSD, and they have a big influence on Tesla's overall financial success. Applying a 30 PSDA ratio to the FSD inclusive scenarios results in stock prices ranging from $1,515 to nearly $2,200 per share, with market caps reaching into the trillions. In the ultra bear scenario, the revenue from FSD alone could reach over $570 billion, with net income exceeding $164 billion. Your 100 shares in 2030 could be worth anywhere between $150, $1,000, and over $217,000, depending on the circumstances. These estimates show the possibility of large profits, particularly when taking into account how Tesla's FSD business would affect its overall valuation in the most likely scenario. With a cautious price to earnings ratio of 30 applied to Tesla's shares, the forecast stock price would be $1,777 per share, translating into a market capitalization of just under $6 trillion. Total revenue is expected to reach about $700 billion with a net income of $992 billion. Under these circumstances, the value of 100 shares in 2030 would surpass $177,000, representing a significant gain of nearly $158,000. However, it's important to keep in mind that this projection excludes the potential impact of fully autonomous and robot taxi services, which could greatly improve Tesla's financial performance if it were to achieve such remarkable revenue numbers. A higher PE ratio, like 40, could be more appropriate and might push the market capitalization to almost $7.7 trillion. A PE ratio of 30 might not be enough. Even when using a more cautious PE ratio, such as 35 or 30, considering the licensing and FSD components, some analysts and experts now estimate that Tesla's market value might yet reach an astounding $4 trillion. To further emphasize the enormous potential, Elon Musk has even hinted at Tesla may surpass the aggregate market capitalization of firms like Apple and Amazon. These forecasts are hypothetical and predicated on a number of assumptions. Although the figures may appear startling, they highlight the revolutionary potential of Tesla's business strategy. A number of factors, like its growth into FSD robot taxi services and other technology advancements, will determine Tesla's future performance. Given the company's diverse approach to innovation and growth, investing in Tesla now could offer substantial potential for future benefits. All right. That gets us to the end of today's examining Tesla's stock worth in depth. We've looked at a range of situations from the ultra bear to the ultra bull. cases, and we've even taken into account how revolutionary fully autonomous and robot taxi services could be. It's time for your opinions. Which scenario do you think is most likely, and what do you think about Tesla's prospects? The numbers may seem astounding, but they highlight the revolutionary potential of Tesla's business model. Please leave your thoughts in the comment section below. If you thought this video was insightful and thought-provoking, please remember to hit the like button. If you haven't already, now is the ideal time to subscribe to Tesla's stock news. Thank you for joining us today, and we hope to see you again soon for more exciting updates.